Welcome to our deep dive into the secret stock market strategies used by the world's richest investors. In this video, we'll uncover the tactics that billionaires like Warren Buffett, Elon Musk, and others use to dominate the markets. These aren't get-rich-quick schemes, but proven methods grounded in discipline, research, and patience. By the end, you'll have actionable insights to apply to your own investing journey. Let's start with the mindset of the ultra-wealthy. The richest investors don't chase trends or panic during market dips. They focus on long-term value and ignore short-term noise. Take Warren Buffett, the Oracle of Omaha, whose net worth in 2025 is over $110 billion. His strategy is simple: buy great companies at fair prices and hold them for decades. In 2025, Buffett's Berkshire Hathaway is sitting on a record $334 billion in cash. Why? Because he waits for opportunities when others are fearful. This patience has made Berkshire Hathaway's stock rise 11% in 2025 alone. Contrast this with the average investor who buys high and sells low, driven by emotion. The rich stay disciplined, and that's our first lesson. Think long-term. Next, let's talk about diversification, but not the kind you might expect. Billionaires diversify strategically, not blindly. They focus on sectors they understand deeply, like tech or retail. Elon Musk, worth $340 billion in April 2025, doesn't spread his wealth across hundreds of stocks. His fortune is tied to Tesla, SpaceX, and XAI, companies he controls and believes in. This concentrated approach works because he's an expert in his field. For you, this means investing in industries you know well. If you work in healthcare, study healthcare stocks. Knowledge reduces risk and boosts confidence. Another key strategy is leveraging market downturns. In early 2025, the S&P 500 dropped 11% in just 3 days due to tariff announcements. The world's 10 richest lost $172 billion combined. But investors like Buffett saw this as a buying opportunity. He's famous for saying, "Be greedy when others are fearful." When stocks crash, quality companies often get undervalued. That's when the rich swoop in, buying at a discount. You can do this too, by keeping cash reserves for market dips. Don't invest all your money at once. Hold some back for when prices drop. This strategy requires discipline but can lead to massive gains. Now let's explore how the wealthy use insider knowledge legally. Billionaires like Larry Ellison, worth $192 billion, invest heavily in their own companies. Ellison's stake in Oracle and Tesla gives him unique insights into their operations. You can mimic this by researching companies thoroughly. Read annual reports, listen to earnings calls, and follow industry news. This gives you an edge over casual investors. For example, in 2025, tech stocks like Nvidia are volatile due to AI hype. Jensen Huang, Nvidia's CEO, saw his wealth hit $100 billion, but informed investors knew Nvidia's growth was tied to AI demand. Researching trends like AI can help you spot winners early. Another tactic is tax optimization. The ultra-rich minimize taxes to keep more of their gains. They borrow against their stock holdings instead of selling. This avoids capital gains taxes. Elon Musk, for instance, has pledged Tesla stock for loans. You might not have billions to borrow, but you can use tax-advantaged accounts. IRA and 401gs let your investments grow tax-free or tax-deferred. Max these out before investing in taxable accounts. Also consider tax loss harvesting. Sell losing stocks to offset gains elsewhere. This can save you thousands over time. Now let's discuss the power of compounding. The rich let their money grow over decades. Buffett's wealth is massive because he started young and never stopped. At a 10% annual return, $1,000 becomes over $10,000 in 30 years. Start investing now, even if it's just $100 a month. Over time, compounding works magic. The S&P 500 has returned about 10% annually over the last 30 years. Investing in a low-cost index fund can harness this growth. Peter Lynch, who earned 29% annually at Fidelity, loved simple businesses. He invested in companies he understood, like Dunkin' Donuts. You don't need to chase complex tech stocks to win. Look for strong, boring companies with steady profits. Another secret is avoiding market timing. Lynch said more money is lost preparing for corrections than in corrections themselves. Trying to predict crashes often leads to missing rallies. In 2025, markets are volatile due to tariffs and recession fears, but the rich stay invested, knowing markets recover. Dollar cost averaging is a great way to do this. Invest a fixed amount regularly, regardless of market conditions. This smooths out your purchase price over time. It's a strategy even billionaires endorse for its simplicity. Let's talk about alternative investments. The ultra-rich don't just invest in stocks. They own real estate, private companies, and even art. Donald Bren, worth $18.9 billion, is America's richest real estate baron. His wealth comes from owning prime California properties. You can start small with real estate investment trusts or REIT. These let you invest in property without buying buildings. REIT often pay high dividends, adding to your income. Private equity is another billionaire favorite. Michael Platt, worth $18.8 billion, made his fortune in hedge funds. Retail investors can access private equity through ETF. These funds invest in private companies, often with high growth potential. Be cautious as they can be riskier than stocks. The rich also use trend-following strategies. In 2025, some hedge funds use rules-based systems to navigate volatility. For example, they shift to T-bills during downtrends. You can adopt a simpler version by rebalancing your portfolio. Sell winners and buy losers to maintain your target allocation. This keeps risk in check and forces you to buy low. Let's not forget about dividends. Rob Walton, worth $117 billion, benefits from Walmart's dividends. Dividend stocks provide passive income and stability. Look for companies with a history of increasing payouts. Examples include Coca-Cola and Johnson & Johnson. Reinvest dividends to supercharge compounding. Over 20 years, this can double your returns. The rich also focus on global opportunities. Carlos Slim, worth billions, dominates Latin America's telecom market. In 2025, emerging markets like India and Africa are growing fast. Invest in international ETAs to capture this growth. They diversify your portfolio and reduce U.S. market risk. Finally, the wealthy surround themselves with experts. They hire financial advisors, tax lawyers, and analysts. You can access similar expertise through robo-advisors. Platforms like Betterment or Wealthfront offer low-cost advice. They optimize your portfolio based on your goals. To wrap up, let's summarize the key strategies. Think long-term and stay disciplined. Diversify strategically in areas you understand. Buy during market dips and hold cash reserves. Research deeply to gain an edge. Optimize taxes with smart accounts and strategies. Harness compounding by starting early. Avoid market timing and use dollar cost averaging. Explore alternative investments like REIT. Focus on dividends and global markets, and lean on experts or robo-advisors. These strategies aren't secrets, they're disciplines. Anyone can apply them with effort and consistency. In 2025, the stock market is full of opportunities and risks. By following these principles, you can navigate it like the pros. Start small, stay patient, and keep learning. Thanks for watching, and happy investing.